All right, welcome. Excited to hop on another stream here, second stream. So, hoping to do these more often. Just came back from a solid travel week. Was able to snowboard at Mammoth Mountain. Also, had a trading event over in Chicago. So, that was really awesome. And on today's stream, I just want to talk a little bit about just one of the things that got me into even more so being a trader and really valuing the skill set of trading. So I'm gonna just take a little bit of a step back and talk about why. So the first reason I wanted to become a trader was it seemed like the best thing I could possibly do to enhance my life, enhance my family's life. One of my most successful family members, he was a trader, and he was able to do a lot of awesome things. He was able to travel all over the world. He was able to have multiple houses. He was able to help his family out, my family out. It was really the skill that seemed to be the one to gain, and of course, it seemed really cool to do as well. So you see Wall Street, you see all those movies about Wall Street. Seems super exciting. It seems sexy to be a trader. And that was kind of the initial thing, is like, if you want to make money in the capital markets, be a trader, right? But after that, after I started getting into this space, I really had to go through a journey to understand why it was that I wanted to be a trader versus, say, an investor or something else. So let's talk about trading versus investing. So one of the main ways people gain wealth is through longer term investing. So that's just the facts. Because when you have time on your side, you really get the power of compound interest with that long term investments. And of course, trading is a skill set. It's something where most people don't last the test of time. But say you are a good trader, of course, you're going to have the compound interest as well. But I, at one point, decided that I was like, you know what? I think investing is for me. I think just investing is the way to go, because I know it's very passive. I know it can be very powerful. I know if I just, hold on long enough to powerful assets, I'm going to have a lot of wealth. Just the basics, say investing in the S&P 500, like most investment professionals suggest doing, is that, getting that 8 to 12% return annualized for, 40, 50 years is extremely powerful. And it's done that, hundreds and hundreds of years in a row. So that's where you can kind of easily create wealth. So that was kind of where I first was like, you know what, this makes sense, especially when the skill of trading was still something I needed to learn. And eventually I found out where trading really fits inside my life. So for me, investing is that long-term wealth accumulation. And that's all good. But the problem is when you're investing, you have to deal with the market cycle. So say I'm looking at the total crypto market right here. Let's go ahead and just make it a log chart so we can actually see this thing, right? So say just on a month by month basis, you might look at this chart, and we're using crypto, of course, as our example, but we're looking at this chart and you're like, yeah, the market's going up, but that's not completely the case. For example, what are these moves from, say, top to bottom? That's almost 90%. So depending on where you're starting to invest is crucial, right? You can get in at the highs of a market cycle and be down 90% of your money, which means, say, you get up to $100,000, give or take. Now you'd have only $10,000 or whatever multiple you're using or amount you're using. That's the problem I've found with investing. And no matter what, say you do face some certain gains, you get your portfolio to gain a certain amount, but at the top of any market cycle, you're kind of going to be used to that amount that you had, whatever that might be. You're going to see your portfolio at a certain amount. And once there's any bear markets, for example, this last one, about 76% from the highs, your money is crippled, in my opinion, at least from a psychological standpoint, especially when you're first starting out. So I think it's all great to where you have time on your side when it comes to investing. And if you do it properly, you should. But it's a difficult thing if you want the functionality of it. If you want the functionality of investing, say 20 years from now, you're going to go through enough market cycles to where you're going to have some functionality, where your portfolio was, a little bit of money and then it turned into, a lot of money to where you can maybe dip into and be just fine. But if you're just starting out and you're investing, and you go through these bear markets and your money is cut down, whatever it might be, 30, 60, 90%, that is the challenge. It's not that functional anymore. I don't want to spend any of my money. I remember in my, when I just invested, if my portfolio was down even 50%, I don't want to spend any of that money, especially if I'm new. So this is really where trading is the game changer, because to me, trading is much more functional, because what you're doing in trading compared to investing is you are preserving your capital. You're not letting your portfolio go down 50, 90%. I mean, really, I try to keep my portfolio not drawing down more than 4% or 6%. I really try to keep it just growing from there. And that's where it becomes so much more functional. So that's the big thing I want to talk about, at least on this video, is that's where trading can be helpful. For example, let's just get a quick example, see if I can find one on say a trade that I've taken. Let's see here, one that's actually I'm out of. That was really good. So here's a trade I took on ARC block. It shot up pretty substantially. Its high from the breakout that I took was around 549%, one of those awesome trades. And the thing about this, actually, let's use a different one. This one hasn't come down too much. Let's go into one that's come down a lot more. Here we go. Here's a great example, because you're actually seeing a cycle. So we have this breakout here of a symbol protocol. It went up, or at least the last time I took profit was around 89%. I took 50% about halfway through, another 50%, close to the top. So when it comes to the candle closes, but the price came all the way back down. I also took myself out with a trailing stop loss. If you're new, these are all probably confusing things, but the long story short is I made money and I protected my profit. And I'm going to be doing this over and over again in the trading space. So my account is ideally staying very stable and growing and not going through the crazy fluctuations like you have with investing. So in future videos, I'm going to go a lot more over my trades. But the big piece here in this video that I want to share is I think there's a need for many skill sets. And I think investing is great, but trading gives you the ability to have a much more functional set of income potentially. So I have an investment portfolio, which I just hold long term. I'm not worried about the fluctuations, but I have a trading account that I can keep building that I actually have kind of much more control over. I can manage my risk a lot more tightly. If I'm trading, I can make sure that I'm taking certain amounts of profits when there are gains, and I can find the average amount that I'm gaining on my trades. And I found that to be super powerful from a functional level, because then I can now have certain spending money. Now I know how much money I could typically have given on my account size per trade. Say I'm risking 1% of my account and my average trade is going to grow my account a 3% multiple of that 1% risk. So that means I can generally see how many winning trades I have per month and know that I'm going to get a certain amount over and over and over again. And my account's not just going to evaporate out of the blue like it does for longer term investing when you hit those bear markets. So hopefully that doesn't sound too complex or doesn't make sense, but really, trading, in my opinion, is a great way to get the functional side of investing. You'll be able to protect your account. You'll be able to grow that account. You'll be able to manage that account tightly. Then you'll be able to take those profits that you make from your trades and actually use them. Maybe it's paying rent. Maybe it's buying something. Maybe it's funding a trip. It's a much easier process to do, in my opinion, when you're trading rather than when you're investing long term, especially if you're in a bear market. If you're in a bull market long term, it's easy to pull profits, but it's not that easy when you're in a drawdown of a market cycle. So let's just kind of hit this home here. Let's get this log chart out of here to kind of get a better example. If I'm investing, this is a total crypto market. Let's just use Bitcoin if somebody's familiar with Bitcoin. As Bitcoin rose substantially, from the last bull market, wherever point you said you bought or whatever, say it goes up that 500%. It's really easy to have a functional lifestyle with that investment. But on the other hand, when you're in this side of the game, where your portfolio might be down 70%, it's not that functional anymore. All of that money that you did have in your account just doesn't feel like it's there. And especially if you haven't been in the market for a while, you might not be at a point where it makes sense to spend any of that money. Okay. But if you then are, say, trading and you're doing things like trailing your stop losses, you're taking 50, whatever it might be. I take 50% profits often. You're taking profits. You're making sure that maybe your account isn't going into drawdown. That is a very helpful thing, because then you'll be able to preserve your account rather than see your account, just go down substantially over time if you're in a bear market. So that's all I really wanted to go over on this. I just wanted to share that perspective when it comes to why trading, why trading versus investing. A lot of people go, oh, I just invest. And I think that's great. That's where you build wealth. But depending on what side of the market cycle you're on in that investment, it becomes not so fun very quickly. For example, I remember I was investing in altcoins, and altcoins, I didn't know at the time, pull back around 90% each market cycle. So basically, my account is down 90%. Every $1 I spend is basically like $10, or whatever the math adds up to. It's substantially worse when you have to spend those dollars when your portfolio is down. In my case, 90%. So that's where I really got into trading. It's awesome to make money in these bull markets. Not many people secure that money. When you trade, you're able to really just learn, at least traditional trading, you're able to learn how to preserve your account. If the market turns and starts to go into a bear market, all of your trades will get stopped out if you're trading properly. There's no way your stop loss is at the bottom of the market cycle. You're going to be trailing your positions, or at least I trail my positions, so they'll all get stopped out in profit, and that will be my working capital, my functional capital. So I think that's a key piece on, I think, why trading is so powerful. And I think it's a way to have more functional money in this game. And you don't have to be the person that everybody thinks that trading is day trading. Trading is not just day trading. You can trade on higher time frames. You can trade more passively. You can even make it like it's investing. But if you have a key few principles on how to protect your account, how to make sure that you don't hit an entire bear market, that you can actually pull profits at a consistent basis and understand what your income is on average. Of course, there's different market cycles. It's going to ebb and flow, but it's so much more functional in the end if you really want to feel the functionality of the financial markets. Now, if you just want wealth, say later down the line, 5, 10, 20, 40 years from now, that's where long-term investing is huge, but it's easier said than done. To say that you just never need money for the next 10 years is, especially if you're like an entrepreneur like I am, we often have to make huge investments in ourselves, huge investments into our businesses, and take risks. Now, if you haven't grown your account or preserved your account, there is times where you could have used that money that you've made investing and wish you didn't hold it through a bear market. And this is where I think both are an option. You don't have to just be a trader. You don't have to just be an investor. But if you know what utility that you're looking for, I think that's the key piece. So for me, being an entrepreneur, also being an investor, I've really enjoyed both. I have a long-term portfolio. It's going to go up huge and then it's going to go down huge over and over again until at some point I'm just always up regardless of the market cycle, even though it sucks to be down in any case. But from a functional perspective, if I need money to pay for trips, if I need money to pay rent, etc., my trading portfolio is one that always gives me that consistency that I can rely on more so. Of course, there's all sorts of things that can happen in the market. Your strategy might not be working in a certain market cycle, etc. But overall, long story short, trading is the functional side of this game, in my opinion. So hopefully that helps. Hopefully that got a little bit of a perspective on trading. In my future videos, I'm going to go over more about how I trade, what I look for, how I manage my trades, so you can get a better idea on what that looks like. But overall, the concept of really what is the utility of trading, I think that's the thing I wanted to pitch home for this video. So hope that helped, and I'll see you guys on the next video.